Welcome to the deep dive. So you're looking to quickly get up to speed on the fast-moving consumer goods sector, right? And specifically, Hindustan Foods Ltd.
That's the plan, yeah. We've dug into a whole stack of their annual reports, other documents too, covering quite a few years.
To give everyone a really solid perspective.
Exactly. The mission, you could say, is to pull out the key stuff, HFL's operations, how they're growing, their strategy. We want you to walk away with a pretty comprehensive understanding of where they've come from and where they seem to be heading.
Okay, sounds good. So let's start with the basics. Who is Hindustan Foods Ltd? Why focus on them?
Well, HFL has been around for a while, over 30 years in the Indian FMCG contract manufacturing game. What's really interesting, I think, is how diversified they are.
So not just one type of product.
No, not at all. They make stuff for, big international brands and smaller local innovators, too. They've built up a reputation as a trusted partner.
Right. So they must offer quite a range of services then.
They really do. Their whole model seems built on flexibility. They can work with tiny startups, the real disruptors, but also the massive established players. They really push this one-stop shop idea.
Makes sense.
And they have dedicated teams for different types of clients. Plus, their reach across India is pretty significant. They had, 11 manufacturing sites back in 2021?
11. Wow. And what's their big picture goal? Their ambition?
It's pretty clear, actually. They state their vision is to be the largest FMCG contract manufacturer in India. Yeah. And the plan involves expanding into more product types and different parts of the country. Diversification is key.
Okay, to really get HFL, we probably need a bit of context on the market itself. What's the Indian FMCG scene like?
Oh, it's huge. And growing fast. Just to give you an idea, back in 2018, it was worth something like $53 billion US.
53 billion.
And the projection for 2020 was nearly double that, about 104 billion. So it's a really dynamic sector.
That's incredible growth, and I heard the rural market is particularly important.
Absolutely. Yeah, the rural areas are a massive engine for FMCG growth in India. We're talking around 45% of total revenue coming from there.
Wow, almost half.
Yeah, better distribution, more access to goods. It's all driving demand out there.
So when we say FMCG, what kinds of products are we typically talking about? Things HFL might make?
It's a broad category, but a really big slice is personal and home care.
Okay.
So think about your everyday things. Toothpaste, shampoo, soaps, skin creams, but also cosmetics, perfumes, that sort of stuff.
Got it. So huge market, lots of growth.
Yeah.
Why would brands choose someone like HFL instead of just making everything themselves?
Well, partly it's just the sheer volume, right? More demand for FMCG means more manufacturing needed.
Sure.
But it's also really strategic for the brand owners. They have to weigh up, investing millions in their own factories versus partnering with a specialist like HFL.
Right, the make or buy decision.
Exactly. It often comes down to cost, flexibility, speed to market. And it lets the brand focus on, branding and marketing, their core strengths usually.
That makes a lot of sense. And there was also talk about global manufacturing shifts potentially benefiting India.
Yes, that's definitely part of the picture now. Recent years, global events, they've shown the risks of having all your manufacturing eggs in one basket, so to speak.
Like China, for instance.
Precisely. So India is being seen as a potentially attractive alternative for diversifying supply chains. Companies like HFL could really stand to gain from that trend.
Interesting. So how is HFL actually trying to capture this growth? What's their strategy?
It seems to be a few things working together. That focus on the rural market we mentioned, that's key.
Tapping into that growth.
Definitely. They're also investing in technology, presumably for efficiency and better reach. And fundamentally, they seem to have this deep belief in the long-term Indian consumption story, even if there are, short-term bumps in the road.
They sound quite deliberate about their approach.
They do. It's quite interesting to actually use this analogy, comparing their strategy to the Greek goddess Athena.
Athena?
Yeah. They talk about leading through learning, execution, adaptation, and delivery. That adaptation part seems particularly relevant when you look at their recent moves.
And acquisitions too, right?
Yeah.
M&A seems important for them.
Very much so. Acquiring facilities seems to be a core part of how they expand their capabilities quickly.
Okay, speaking of capabilities.
Yeah.
What kind of things can they actually make? You mentioned diversification.
Right. Well, beyond the typical home and personal care items, they have some perhaps surprising capabilities. For example, back in their FY17 reports, they talk about a shoe factory they acquired.
Shoes?
Yeah, acquired from Pond's Exports Ltd, actually. It can apparently handle making the whole shoe, or just the uppers. They made a point of mentioning its quality systems and even a design studio with CAD/CAM.
So much broader than just soaps and shampoos.
Exactly, not your typical FMCG image, perhaps. They also have sites doing things like tea and coffee processing.
Okay.
And more recently, they've made some really big moves specifically in the shoe sector.
Ah, tell me about that. Sounds like a recent strategic push.
It really does. So, February 2024, they bought a sports shoe unit up in Kundli, Haryana. That was through a subsidiary called KNS Shoe Tech.
KNS Shoe Tech. Got it.
And then just a couple of months later, April 2024, they acquired a company called SSIPL Retail Limited.
Okay.
That added another 3 manufacturing units in Himachal Pradesh and Haryana, also focused on footwear, again under KNS Shoe Tech.
Wow, that's quite an aggressive expansion in shoes.
It is, and they explicitly link it to the Make in India initiative. It shows a very clear direction, doesn't it?
It certainly does. So their buying capacity, how do they structure the deals with their clients? What are the manufacturing models?
They seem to have 2 main approaches. First is what they call dedicated manufacturing.
Okay.
That's where they set up production lines or maybe even a whole factory just for one specific client, highly customized, exclusive.
Right, tailored.
Exactly. The second is private label manufacturing. This sounds more like a turnkey solution. HFL can handle more, even things like the product formula, and then the client puts their brand on it.
Okay, that gives brands a lot of options. Let's shift gears to the numbers. How's HFL been doing financially?
Well, looking across the reports, the revenue growth has been pretty consistent, sometimes quite sharp.
Good.
Like the jump between fiscal 20 and fiscal 21, for instance, that was significant. It looks like it was driven by, higher demand in some product areas and also bringing those acquisitions online successfully.
So they're managing to integrate them well.
It appears so. It's also useful to see how they break down that revenue. How much is actual manufacturing versus trading goods or providing services, and of course the split between India and exports.
Right. And what about profit? Is the growth translating to the bottom line?
Generally, yes. Profit before tax, profit for the year. Those figures have mostly shown positive trends over the periods we looked at. Looking at the balance sheet, you see total equity growing, but also total borrowings increasing. They calculate something called total debt, basically borrowings minus their cash.
Okay, net debt, essentially.
Pretty much. And their gearing ratio, debt versus equity, is obviously something to keep an eye on, especially with acquisitions.
And I imagine they're investing heavily, too, for future growth.
Oh, definitely. You see significant capital expenditure, particularly on property, plant, and equipment.
Like factories and machinery.
Exactly. And things like capital work in progress. They mention an ice cream factory project in Nashik, for instance. That signals future capacity coming online.
Ice cream, too.
Yeah. And just small details, but they mention using the weighted average method for valuing inventory and having provisions for stuff that might become obsolete. Standard stuff, but good to note.
What about their costs running the business?
You can track things like employee benefit expenses and finance costs. The finance costs, unsurprisingly, have risen, which likely ties back to the borrowing needed for those expansions and acquisitions we talked about.
Makes sense using debt to grow.
Right. And they also disclose details on pay for key managers, like Mr. Arjkar and Mr. Kathari, and mention average salary increases for other staff. It suggests they're investing in their people, too.
Any red flags around dealings with related companies, subsidiaries and things?
Well, they generally state in the reports we saw that there weren't any materially significant transactions that might pose a conflict of interest during those specific periods.
Okay.
But they do list out the transactions they have with subsidiaries and associates, places like Avalon Cosmetics, ATC Beverages. So there's transparency there.
Good.
Mm-hmm.
Okay. Moving away from just the numbers.
Yeah.
How do they seem to run the company itself? Corporate governance.
Their stated philosophy is all about high ethical standards and maximizing value for all stakeholders, shareholders, employees, customers.
Usual goal.
Pretty standard, yes. The board structure looks pretty robust. A good mix of executive and non-executive directors, a decent number of independents, and a non-executive chairman.
And the committees are all in place? Audit, remuneration?
Yep. They list out the key ones. Nomination and remuneration, stakeholders relationship for investor issues, a CSR committee for their social responsibility stuff, and a risk management committee.
CSR committee. Interesting. Overseeing their social impact.
Exactly, making sure they meet regulations and, ethical expectations. Plus, they have a whistleblower policy, a way for people to report concerns anonymously.
So hitting the right compliance notes.
It seems so. They emphasize compliance with SEBI rules, secretarial standards, and there's a steady trend towards shares being held electronically dematerialized, which is just more efficient.
Uh,
The reports also detail how directors get appointed or reappointed, including the independent ones, standard governance procedures.
mhm. And finally, two big topics today: risk and sustainability. How does HFL stack up there?
They talk about proactively managing risks, which you'd expect. On sustainability, it's good to see them highlighting actual initiatives.
Like what?
Things like using solar power at their plants, harvesting rainwater, trying eco-friendly packaging, and using briquette boilers, which burn agricultural waste, a cleaner fuel source.
Okay, so concrete steps.
Yeah, and they also have that formal corporate social responsibility policy guiding their community work and other initiatives.
Okay, so let's try and pull this all together. After this deep dive, what are the main takeaways about Hindustan Foods Ltd?
Well, we've seen a company that's a long-standing, significant player in India's FMCG contract manufacturing world, a sector that's clearly booming.
Right.
Their strategy seems focused on diversification, not just in traditional FMCG, but quite aggressively recently into footwear. That shows adaptability.
Mm-hmm. And the financials back that up.
Largely, yes. Consistent growth,
Yeah.
fueled by both organic demand and these strategic acquisitions. They seem to be managing that expansion reasonably well, based on the reports.
And governance and sustainability seem okay.
They appear committed to good governance practices and are definitely making moves on the sustainability front. Overall, HFL looks like it's positioning itself very deliberately to capitalize on India's growth story.
So for everyone listening, you should now have a much deeper, more nuanced understanding of HFL, its business, strategy, and the market it operates in. Way beyond just a news headline, hopefully.
Yeah. And maybe it leaves you with a thought to chew on. With this big shift towards outsourcing in FMCG, what do you think are the biggest opportunities and maybe the trickiest challenges facing contract manufacturers like HFL going forward?
Hmm.
And how might all this change the game for the big brands and the new ones trying to break in?
Definitely something to think about. And of course, if you want even more detail, HFL's reports are out there for you to explore. Thanks for joining us for this deep dive.